Hello and welcome back to another video. James Vane of the binary-signal.com. In this video, I'm going to show you the bearish reversal candlesticks patterns. In the recent video, I've shown you the bearish reversal candlestick patterns that I use to trade binary options. So the bearish reversal candlestick patterns are the most highly reliable bearish reversal candlesticks patterns that I use and I look for when trading binary options. And those candlesticks patterns do indicate when a bullish trend is reversing and a bearish trend is coming in, and so this is I will be showing you the candlestick patterns that I used. Most of them are very reliable ones. So the first one is the engulfing candlestick pattern. We've seen this pattern in the recent video when you look on the bullish candlestick patterns, and this one will be seeing it on an uptrend, and when it indicates a bearish trend start or beginning. So let me just show you. This is an uptrend, as you can see, going up. This is a blue candle, and when you see this, this candle has opened here and closed here. Okay, but this bearish candle or red candle opened on the close of this blue candle and closed below, very far, in fact, below this blue candle open. So this is the engulfing candlestick pattern on an uptrend. When reversing the uptrend into a downtrend, we find the red candle opens on the close of the blue candle and closes just below the the open of the blue candle. And on a 5-minute chart, when trading binary options, I use this candle on a 5-minute chart. As I said, I take this for 5 minutes beginning from this point, meaning I time my trades and I really stick strictly to the rules that I use when trading binary options. I take this candle, or I take the trade on this in the open of this candle on the beginning 10 seconds in fact of this 5-minute candle, and as I said, 80% of the time it will be in the bearish candle, and left 20% it does go up. And on a 1-minute chart, when trading typical trades 2 minutes or 3 minutes, when I use it on a 1-minute chart, I like to take 20 seconds or 2-minute trades, because sometimes it goes up and then the other one just go below it and continue in a downtrend. Okay, let me just take out this one. Proceed to another one, which is the evening or the shooting star. This is another candle pattern that is very strong one, that indicates the uptrend reversal. And as you can see right here, this is it. This is the candle that I'm talking about, this one. As you see right here, this is the criteria of this candle, the evening star or the shooting star. You see a normal or a small body, let's just say, a very short tail to the downside, and sometimes the tail may come two times of the body, and sometimes it just comes to here and sometimes here. It depends on the power of the buyers, and when they push the not the buyers, sorry, the sellers, when they push the prices down to form this candle, and then they take the price down, correcting this uptrend. So those are the criteria of an evening star. It can at the end of a bullish trend or an uptrend, when you see this this pattern, you just wait for this to close as this pattern, as a shooting star. Sometimes there is no tail to the downside, sometimes it is very short, and to the upside we see a small body like this one, and a short, sometimes medium, shadow to the upside, or sometimes long that way. And we take a set rate on the open of this candle depending on the previous trend power or strength. We move on to another one, which is a similar candle but to the opposite side. What I mean, to the opposite side, it has this hanging man candle pattern, and let me just show it to you. This is it, the hanging man. Where are you here? Yes, this one and this one. Those are, I have collected three shapes, different shapes for the hanging man. When you see this, you see small body, then short tail to the upside, and a long, or let's just say 2 times of the body. This the shadow is 2 times of the body, not 2 times, a double of the body, and it go sometimes it's that that short, sometimes it's very long that way, sometimes the body is more strong or long than this one. And also, and the main criteria, and this one also has a long or a medium shadow to the downside, and a short shadow to the upside, and a small body. This is the hanging man. You find it in at the end of an uptrend, and when it forms this, you just wait for that indicates you this trend reversal, and you need to combine it also with other indications like the overbought and support and resistance levels. This is how it works. You can't in fact you can't rely on only those patterns, especially on lower time frames like 1 minute, 5 minutes. On a 4-hour chart, that works. Those candles patterns are reliable, but they are always reliable. But on the lower time frames, because the expiry is too short, and those time frames themselves are not reliable for long-term trades, or 5-minute chart is not reliable for a 1-hour chart. For an hour expiry trade on binary options, you need to use 50 minutes or 30 minutes, in fact. Okay, so those are the criteria. So those are the criteria for the hanging man candlestick pattern: small body, short tail to the upside, and a long or medium shadow to the downside. We'll proceed to the next one, which is the 3 black crows. This 3 black crows is, when you see this, it is the opposite of the 3 white soldiers on the bullish reversal candlestick patterns. We see this; those are the ones that I'm talking about. We see this a red candle, another red candle. It comes at the end of a bullish trend. You see this; it's been somehow a weak bullish trend effect. And when you see these 3 candles are coming in all together, one by one, following each other, you need this indicates to you that this is the reverse. This uptrend is reversing down, and you take down the trades and this candle to the downside. Also, you need to take care and pay attention to and you look left in your chart to see if there is a strong, even the price confluence area or support levels, and you need to, as I said, you can't rely only on those. You need to use some other indications. that you trade on and use. We move to another in the candles pattern, which is the 3 inside down. And let me just show you where are those ones. Those are the opposite of the bearish reversal candlesticks patterns, which are the 3 outside up. And in the downtrend, when you see an uptrend and you see this pattern, this indicates a bearish trend or bearish trend reversal, and the bearish trend is coming in. As you see here, this is a blue candle or a bearish candle, opened here, closed here, and you find another one red candle opens here below, just below, and it will be contained within the body of this blue candle. And this pattern itself right here is inside bar or harami, and you just take it to the downside when you see just this pattern. We'll be explaining the inside bar soon, so let's just focus on this one. For people who came late or they just find this pattern, they need to take another downtrend, not down call, down to trades. So as I said, blue candle opens here, closes here, and this one opens within the body of this blue candle. That means opens just below the close of this candle and closes above the open of this blue candle. And we need another one, which is a bearish candle. It doesn't matter where this one will be opening. What does matter is that it's as I said, also this one just takes some 35 to 60% of the this candle power or body, and this one opens here within the candle, the body of this blue candle, and closes just below and the open of the blue candle. When we see this pattern itself, that indicates us that this is a strong reversal pattern, and we go to the downside, and that indicates this uptrend has been ended with this strong pattern. We move on to another one, which is the doji. The doji pattern is a candle that has a small body or just a line. Well, small body is just a small body, and two shadows on both sides. I mean, shadow to the upside and shadow to the downside. Those shadows must be close to each other, and that means this one must be equal to this down shadow in their length. But if there is a small difference between them, it doesn't matter. Just they must be just somehow close to each other. And the doji, as I said, is represents the indecisiveness of the market, and it indicates that neither buyers or sellers are in control. They just confused. They are 50 in controlling the market or the price. Okay, and it also indicates that this uptrend is going to go. This is the end of this uptrend, and that the coming that we are reversing the trend, and we're going to have a bearish trend impact. And we move to another one, which is the inside bar. As I also mentioned, the inside bar, we can find it has the same criteria, in fact, and we can find it in an uptrend and at the end of an uptrend or a downtrend. The criteria are which matters, okay? And where we find it doesn't matter. It has the same criteria, okay? We have a blue candle on the upside at the end of an uptrend. We have a blue candle, right? And the bearish candle comes to open just below the close of this blue candle and closes above the open of the blue candle, and this just have a shape of a pregnant woman. In fact, I just gave it that name, and it's also known as this in the forex trading field. And as I said, when you see this pattern, you just take a downtrend, put trade depending on the strength of the previous trend, uptrend, and taking in consideration the support and resistance levels and the price confluence areas and the other indications that you use and in your trading. So this has been the bearish reversal candlesticks patterns. I hope it's been useful and informative for you. And if you have any questions, just feel free to comment below this video in the free group. And thank you for watching the video, and I'll see you soon in another educational videos about price action in the upcoming days and news. Thank you for watching.